Once hailed as a financial genius, Allen Stanford built an empire worth $8 billion, an empire that promised high returns, endless growth, and a secure future. To the world, he was a billionaire living the dream with private jets, sprawling mansions, and a lifestyle most could only imagine. But beneath this illusion of wealth and success lay one of the biggest financial frauds in history. In the mid-1980s, Allen Stanford founded Stanford International Bank in Antigua, a small island in the Caribbean. It seemed like a strange location for such a high-profile bank, but Stanford had a plan. He began offering certificates of deposit CDs that promised exceptionally high interest rates, far above what traditional banks could offer. Investors from around the world were drawn in by the promise of quick and reliable profits. Stanford spared no expense when it came to his lifestyle. He traveled in private jets, partied on mega yachts, and lived in mansions across the world. His public persona was that of a financial mastermind who had unlocked the secrets of wealth, but behind the scenes, it was all built on lies. In reality, Stanford's bank was nothing more than a giant Ponzi scheme. Instead of investing the money he received, Stanford used new deposits to pay returns to earlier investors, all while siphoning off millions for himself. For years, the scheme worked. Investors kept pouring in their savings, lured by the promise of incredible returns, but as with all Ponzi schemes, the illusion could only last so long. In the early 2000s, questions started to arise. How could Stanford offer such high returns when global markets were struggling? The Securities and Exchange Commission (SEC) began investigating, uncovering discrepancies in Stanford's financial statements. As scrutiny increased, the cracks in his empire began to show. In 2009, the SEC, along with the FBI, launched a full-scale investigation into Stanford's financial empire. What they found shocked Wall Street. Stanford had defrauded over 18,000 investors, stealing nearly $8 billion. The wealth that had funded his extravagant lifestyle was built entirely on false promises and manipulated financial statements. Stanford was arrested in June 2009 and charged with multiple counts of fraud, money laundering, and obstruction of justice. His defense tried to argue that the bank was legitimate, claiming that the losses were due to market forces beyond his control, but the evidence was overwhelming. Hundreds of documents, testimonies from former employees, and the sheer scale of the fraud painted a damning picture. The real tragedy of Stanford's scheme was the thousands of ordinary investors who lost everything. Many were retirees, counting on the promised returns to secure their futures. Instead, they were left with nothing. Families were destroyed, and communities that had trusted Stanford's name were left to pick up the pieces. In 2012, Allen Stanford was found guilty on 13 out of 14 charges and sentenced to 110 years in federal prison. His empire, once hailed as a financial marvel, was exposed for what it truly was: a house of cards built on lies. The collapse of Stanford's empire serves as a stark reminder of the dangers of unchecked greed in the world of finance. His fall from grace shocked Wall Street and left thousands of lives in ruins. Today, his name is synonymous with one of the largest financial frauds in history. The story of Allen Stanford is a lesson in the dangers of blind trust and unchecked ambition. It's a reminder that even the most successful-looking empires can be built on deception. His downfall stands as a warning to investors everywhere. If something seems too good to be true, it probably is. For more in-depth documentaries on financial scandals and the secrets of the business world, subscribe to Explore Facts.